Hello there. Inflation in the UK has accelerated from an already very high level and has risen to over 11%. In October, consumer prices rose to 11.1% year on year, according to the ONS Statistics Office in London on Wednesday. And this is the highest level since October 1981. In the previous month, the inflation rate had already amounted to a high 10.1%. Analysts were surprised by the strength of the price increase now. The experts had expected an average inflation rate of 10.7% for October. In a monthly comparison too, the price increase was stronger than expected. In this regard, the Statistical Office reported growth of 2.0%. The Statistics Office explained the increase in inflation primarily with rising prices for gas and electricity. And according to the ONS, food and non-alcoholic beverage prices rose in October at their highest rate since 1977, even hitting lower income groups particularly hard. In response to the data, Treasury Secretary or Chancellor of the Exchequer Jeremy Hunt said, tough but not necessary decisions would be needed to deal with rising prices. It is our duty to support the Bank of England in its task of bringing inflation back on target by stewarding the nation's finances responsibly, said Hunt. After I filmed this video, he presented his plans for restructuring public finances in the House of Commons, but I can't talk about this yet. I will do this, of course, tomorrow. For some time now, the British Central Bank has been fighting the sharp rise in prices by raising interest rates. It has raised its key interest rate several times since the end of last year, and most recently to 3.0%. The financial markets are increasingly determining the economic course of the United Kingdom. Prime Minister Rishi Sunak emphasized last week how important it is to meet the expectations of the international market, because confidence in British economic policy has been shaken. The head of government and his finance minister or Chancellor of the Exchequer, Jeremy Hunt, are wringing their hands trying to pick up the shards left by Sunak's short-term predecessor Liz Truss during her chaotic and short term in office. Great Britain's economy had already stumbled due to the pandemic, aggravated by Brexit, of course. With minus 9.3%, it hit them particularly hard in 2020 in a European comparison, summarizes the Austrian Chamber of Commerce, or WKO, in a current analysis. In 2021, things went up again by 7.4%, but that was still just below the pre-crisis level. And the next crisis followed immediately. The Ukraine war brought high inflation and economic slumps, which once again hit the British harder than the rest of the continent, despite everything Brexiteers are trying to tell us in the comments under the videos. Like everyone else, exorbitant gas and electricity bills are reducing household incomes and dampening consumer demand. Persistent supply shortages and rising overheads are making companies cautious and are already slowing down growth in fixed investments this year. A minus of 1.2% is expected for next year, analyzes the WKO. Due to the very unequal distribution of income, price pressure are intensifying in the UK, pushing more households below the poverty line than in continental Europe, making for even more political explosiveness than elsewhere. And the analysis goes on to say like this. After a weak summer, the British economy is currently on the brink of what could be a protracted recession. The gross domestic product, the GDP, from July to September was 0.2% weaker than in the previous quarter. The Bank of England has already warned of a risk of a 2-year recession. In order to weaken the price spiral, it, as I said earlier in this video, had raised the key interest rate in 7 tranches since December, and now even by 0.75 points to 3%. It's becoming increasingly clear that leaving the EU will cost the world's 5th largest economy considerable strength, which is particularly lacking now. The Office for Budget Responsibility assumes that Brexit will push GDP down by 4% in the long term, and no new trade agreements nor deregulation will have a significant impact on this forecast, was also said by the WKO. The international competitiveness of the British has been permanently damaged by Brexit. And as we always say, Brexit means Brexit, and I'll see you in my next video. I'll be back.